What if the future of money is not a physical entity, but a digital one? Let's journey back in time, when the concept of money didn't even exist. Humans relied on a simple barter system, trading goods for goods. From livestock to grains, everything had its value. But as civilizations evolved, so did our methods of transaction. We moved from barter to precious metals, creating coins as a standardized measure of worth. And then came paper money, a revolution that changed the face of commerce. But now, we're in the midst of another paradigm shift. We're moving from physical to digital transactions, with credit cards, mobile wallets, and online banking. And the latest player to enter the scene: cryptocurrency, a digital asset using cryptography for security and operating independently of a central bank. As we stand on the brink of a digital revolution, it's clear that the future of money might just be a string of code. Cryptocurrency, a term that once seemed alien, is now becoming a household name. But what exactly is it? Well, at its core, cryptocurrency is a digital or virtual currency that uses cryptography for security. It's like money, but with a twist. It exists solely in the digital world. And the technology that powers this digital money, that's called blockchain. So what is blockchain? Imagine a ledger or a notebook where you record all your transactions. Now imagine this ledger is duplicated thousands of times across a network of computers. Every time a transaction occurs, it's recorded in all these ledgers. That's essentially how a blockchain works. Each transaction forms a block, and these blocks are linked together in a chain, hence the name. What makes this technology so revolutionary is its transparency and security. Every transaction is visible to everyone within the network, yet no one can alter it. This prevents fraud and makes cryptocurrencies potentially more reliable than traditional currencies. But how does a transaction actually happen in the world of cryptocurrency? It's actually quite simple. Let's say Alice wants to send Bob some cryptocurrency. She initiates the transaction, which is then broadcasted to the network. The network nodes validate the transaction and the user's status with algorithms. Once verified, the transaction is combined with others to create a new block of data for the ledger. The new block is then added to the existing blockchain, completing the transaction. Now here's another twist. Unlike traditional banking systems, where a central body, like a bank, verifies transactions in the blockchain, the verification is done by a network of computers or nodes. This decentralized system eliminates the need for a middleman, making transactions faster, cheaper, and more efficient. So, in essence, cryptocurrencies are not just digital money. They represent a fundamental shift in how we think about and handle money. They bring with them the promise of greater transparency, security, and accessibility. In a world where transparency and security are paramount, could blockchain be the key to a financial revolution? The rise of cryptocurrencies has sent shockwaves through traditional financial systems. But what does this mean for us? To fully grasp the impact, we need to first understand the legacy financial systems that have been in place for centuries. These systems, dominated by banks and government institutions, have long dictated how money moves around the world. Now, with the advent of cryptocurrencies and blockchain technology, we're seeing a shift in this power dynamic. Cryptocurrencies are challenging the status quo, disrupting traditional financial institutions in ways we never thought possible. They are reducing transaction costs dramatically, making it cheaper to send money across the globe. Imagine sending $100 to another country with only a few cents in fees. That's the promise of cryptocurrencies. Moreover, they are increasing accessibility to financial services worldwide. There are still billions of people around the globe who lack access to basic financial services. Cryptocurrencies, however, do not require a bank account or credit history. All one needs is access to the internet. This opens up a world of opportunities for the unbanked and underbanked populations. Of course, the road to this financial revolution is not without its bumps. Cryptocurrencies face regulatory hurdles as governments struggle to understand and control this new technology. Market volatility is another concern, with prices of cryptocurrencies often swinging wildly from one day to the next. Despite these challenges, the potential for cryptocurrencies to shape a more inclusive financial landscape is undeniable. They offer a level of transparency and security that traditional financial systems simply cannot match. And as more people start to understand and embrace this technology, we can expect to see even more disruption in the world of finance. With every digital coin that passes through the blockchain, we move one step closer to a financial paradigm shift. As we gaze into the crystal ball of finance, what does the future hold? It's a world where money is digital, transactions are transparent, and financial services are accessible to all. The evolution of money from shells and coins to digital cryptocurrencies is a testament to the relentless march of progress. The game changer here is blockchain technology, the backbone of cryptocurrencies, offering security and transparency like never before. But let's not get ahead of ourselves. The road to this digital utopia isn't without its bumps. Regulatory challenges, market volatility, and skepticism are just a few of the hurdles to overcome. Yet, the potential of cryptocurrencies to disrupt and democratize finance is undeniable. As we venture into this brave new world, one thing is clear. The future of finance is evolving, and it's more inclusive, more transparent, and more efficient. In the digital age, the future of finance may not be in our wallets, but at our fingertips.